sole traders, if you use a name other than your own name, you have to register it. And a limited company name, you get a certificate of incorporation, which is like a birth certificate. And there are certain rules and regulations. You cannot, for example, change your name to Microsoft as a sole trader and call yourself Microsoft, because it's kind of passing off, and there is a law about it. So let's just have a look at this. Naming of limited companies. Hands Limited. If the name Hands Limited is registered as a company name, then which of the following is going to be rejected? Give yourself 1 mark for every one you get right. Okay? How well are you going to do? Here we go. Hands Public Limited Company or PLC? Is it acceptable or not? Write it down. Number 1, yes or no? Number 2, H&S Limited or LTD? Yes or no? Guys, write this down. You know, just write yes or no. Ampersand Limited. H&S Company Limited. Do you need time to get paper out? You should already have paper ready. Let's see how many marks you're going to get. Let's see how well. I've actually got the second years asking me how well you guys are doing. And so far I've told them that you guys are pretty hot. Are you going to remain in the lead? Let's see. Let's see. H&S Company, yeah, shh, by yourself. H&S Company Limited. H&S Public Limited Company, or PLC. Are they okay, or are you going to reject them? This is fun. This is a bit of fun, okay? And there are more permutations. Let's have a look. Hands Co. Public Limited Company. Yes or no? H&S Company Public Limited Company. Which would you be allowed to use? H&S Company Public Limited Company. I know the permutations. H&S Company Limited. H&S Co. Public Limited Company. Public Limited, yeah. And the last one, H&S Co. Public Limited Company. Right. Let's see how many of you are going to get 14 out of 14. It's Hands Limited. So, let's see how you do. Number 1, accept or reject. Hands up who says accept. Thank you very much. Hands up who says reject then. Ooh, we've got some fence sitters. Shame on you. Hang on. So well done. Reject it. Number 2. Hands up who says reject. Thank you. Hands up who says accept.
Why?
What about number 3? Hands up who says reject.
Just saying.
Hands up who says accept. What about number 4?
Still reject.
Accept or reject. 4, accept, hands up. Reject, hands up. Number 5, accept or reject. Reject, hands up. Accept, hands up. Okay, brave, brave. Number 6, what do you think it's going to be, accept or reject?
Reject.
And number 7?
Reject.
You detect a pattern. You're going to be a computer scientist after all. Number 8, what about hands company, public limited company? Hands up who says accept. Thank you. Hands up who says reject. What about the next one? Accept or reject?
Reject.
And number 10?
Reject.
And 11?
Reject again.
Hands up who says accept.
One up. HNS
Okay.
co-limited.
Reject? Okay.
Accept.
Reject.
Reject.
Sorry. What about number 12?
Reject.
Reject and the same.
If you've got 11 is no, is 12 accept or reject?
Reject. Reject.
Pattern matching. Stephen, you're right. Number 13, lucky 13. Excuse me, I was born on Friday the 13th. Hands up who says accept. Okay. Hands up who says reject. And finally, 14.
Reject.
Accept or reject.
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 Might be a tricky one. What do you think?
No, it's reject because it's PLC.
Hands up who got 14 out of 14. Rock and roll, did you really? Outstanding. Yes, I thought you up there, sorry, gentleman at the end, I thought maybe you were going to realise because you rejected a lot at the beginning. Hands up who got 10 or more. Well done, well done. Hands up who got 5 or more. Okay, okay. This is a useful exercise because you need to read what it says very carefully. Yes, you need to know the rules and regulations, but you know it's you know because we've spoken about a limited company and the difference between a public limited company. You cannot call yourself a public limited company unless you've gone through an awful lot of rules and regulations for the safety of the public who are allowed to invest in your company. A limited company is not open to the public investment. Okay? But yes, was that fun? Was that
Why
surprise? Right, down to some serious work. Depreciation is coming up, so please attend. Attend well. Depreciation, as I said before, it's a measure. It's a measure. It's something that we measure. It's something that we calculate. It's a value that we calculate. It has a pound value. And in that calculation, we take into account the age, an aging process. We buy something, we know it's going to age, it's going to wear out. So it's the measure of wearing out through usage. And it's a non-current asset. If it's a non-current asset, it's therefore a fixed asset. It's not part of the working capital of the organisation. It's not something that they are going to change on a day-to-day basis. It's there for the long duration. It's a notional or a hypothetical charge to the profit and loss account, the income statement and the balance sheet, which shows the net book value, cost less accumulated depreciation. The great thing about depreciation is we're actually saving money because we charge the profit and loss account, which means we've got less money to distribute if you're a public limited company to shareholders, yeah? Because who gets all the profits? Shareholders, yes. Belongs to who owns the company? Shareholders. Very good. You reduce the profit that's actually available and you put that money aside. So in effect, you're building up a reserve to pay for the replacement of that asset when it's completely worn out. Or when it needs to be changed and updated when new technology comes along. So it's an efficient process. But it also shows in the profit and loss account the usage for that particular period of time. Don't forget, the profit and loss account covers a period of time. It's usually a year. It will be in the exam, 1st of January to 31st of December. The balance sheet, does the balance sheet cover a period of time for a year? For example, hands up who says the balance sheet covers for a company a year or a period of time. Hands up. What is the balance sheet? What's the data?
Snapshot.
Snapshot. Remember what I said? So when you look at the balance sheet, think about that click. It's a snapshot of a moment in time. It's the assets, the liabilities, what we own, what we owe, and what we are owed. Okay? So, you buy an asset and you use it to make goods which are sold. So, for example, a specialised piece of factory equipment, and there's a lovely case study which I might make available to you called CADA, and it's about a Chinese company implementing a large ERP system and the issues that they had and the specialist equipment that they used. If it's used to make goods which are sold, it's essential to making the goods, yes? Then the depreciation is shown up top. Remember, I always say top, middle, or bottom. It's up the top. Well, actually, it's at the middle. It's in direct overheads. So don't get that if it comes up in the exam wrong. Okay? If you have a general asset, for example, office equipment, table, chairs, anything like that, it's shown under indirect overhead and office costs as depreciation. Guys, all of these notes, all of these slides are in the notes that I've put up. I've done a revision of them to make it even more clear. So I will add the latest version up on Study Space for you. So let's have a go at an example. We bought office equipment for £2,000. It's now, at the end of the trading period, worth only £1,500. The diminution in value is depreciation, and it's shown as an overhead under indirect costs. And it's £500. And it's going to be shown as follows. So did you all see that, the depreciation there? Overhead costs. We've got office, and depreciation, indirect. Are you all comfortable with that? It will state you get that, so don't worry. So, let's get the old brain cells working. There are some figures. I would like you, please, this should be second nature to you now, and good practice, to calculate the cost of stock, the cost of sales, and gross profit. This is very important that you practice, that you get confident at doing this, because when you get that question in the exam, as well as all the other questions, although it's MCQ, you will, for example, be asked, what is the cost of stock? Be very careful, because I'm very good at writing distractors. So if you cannot remember exactly how to do it, and you haven't been practicing your questions, you could have an issue. Because I do lots of permutations. So, a bit of practice for you. Cost of stock, cost of sales, and the gross profit. The stock that we've used to sell, stock that we use to make goods which have been sold in that accounting period. If the stock is not used in that accounting period, we don't want it. We want to take it out and put it somewhere else.
Minus
Because it's not part of this. It's going into the future.
So how about the cost of sales?
Cost of sales, we've got direct costs. And then gross profit. If you're not sure, that's fine. Just keep practicing those questions in the workshops. If you need help, don't hesitate to ask. We're there to help you. You've got those templates with the formula, and you know that in the exam you'll get the template without the formula. And just practice doing it with both, and you'll be fine. You'll be fine. So, excuse me. Sorry. Okay. Opening stock, yeah, 7. Purchases gives us 13. Closing stock. How many of you remember to take out the closing stock? Does that mean that the rest of you forgot to do that? Or you're just not saying? So it's 10,000. How many of you got cost of stock £10,000, please? Guys, seriously, do yourself a favour. If you're going to come to one of my lectures, use this as a practice session. So when you do things like this, just work it through. Trust me when I say, by the time you have walked from your seats down the stairs to that door, you will have forgotten most of it, because unless you can fix it from short-term memory into long-term memory, it won't stay. And fixing it is helped by physically doing it. So just sitting there and not doing it, not having a go, really doesn't help your learning processes, your cognitive learning processes. So, direct costs, factory depreciation, which gives cost of sales of £22,500. Hands up who had that figure. Rock and roll. Okay. The rest of you, please practice. So therefore, what's the gross profit? Just make sure you practice that. Okay, gross profit. Here's the other thing. Some of you have made it a typical example in the workshops. Who does the profit belong to in a company? Shareholders. So where else does the profit go? If you've got it in the profit and loss, where else does it go?
Balance sheet.
To where in the balance sheet? Shareholders' funds, capital, yes. Some of you guys are picking up the gross profit and putting it in the balance sheet, which is why your balance sheet is not balancing. It is the net profit. It's that balancing net profit. Don't get that wrong. Okay, if gross profit is 7.5, calculate net profit. Off you go. Thanks. And I still practice writing these things out, because sometimes I think I'm focused on the task ahead, and I make mistakes because I've got so much going on in my mind. And when you're under exam stress conditions, do yourself a favour and write it out. Remember what I said, in the exam, when you've got numbers, work it out in your head first of all, and double check it, double check it then with a calculator. Please don't use the calculator first of all, because it's so easy to make mistakes inputting figures into a calculator. So, overhead costs. Total overheads is 6.5. Therefore, how many of you got? How many of you got that? Rock and roll, well done. Okay. Depreciation methods. Straight line, 2 methods. Straight line and reducing balance. Straight line is calculated by taking the cost and deducting any residual value. Then dividing by the result by the length of years, the time you're going to use that asset for. So if you've got a £100,000 asset, no, £110,000 asset, you've got a residual value of 10,000, and you're going to keep the asset for 10 years. What is the annual depreciation charge if it's straight line balance? Straight line. 110,000. Yeah, write it down, 110,000, residual value of £10,000. The asset is going to last 10 years, so therefore, what is the annual charge year by year by year, using the straight line?
10.
Give me an answer, please.
10.
1,000.
110.
The useful life is 10 years. Good question. The useful life is 10 years.
10.
Okay?
10,000.
110,000 cost, residual value 10,000. Over 10 years, it's going to last you a lifetime of 10 years. And each year you're going to charge the same amount of depreciation. So how much?
10.
10,000.
10,000.
10,000, yeah.
Hands up who says it's 11,000.
It could be 11.
Hands up who says
No,
it's
it's
10,500. Hands up who says it's 10. Right, let's just work it through. You're right. 110,000 is the cost. Deduct the residual value of 10,000 gives you an amount of £100,000. Can you all see that? Divide the 100,000 by 10 years gives you £10,000 every year to charge. Under exam conditions, write it out. You don't necessarily always realise the stress that you're under. So, let's have a go. Office equipment purchased on the first. Guys, you need to read the questions and pay attention. Gentleman at the back, leaning across. With due respect, yes, you. With due respect, please read the question very carefully. You need to read each word. You need to read the dates. Office equipment's purchased on the 1st of January 2010. The cost of 5,000 has a 5-year life. Residual value, 0. Calculate the straight line.
1,000.
2 vehicles, total cost 39,000 on the 1st of January 2011 with a residual
36.
value of £3,000 and a life of 3 years.
12,000.
Calculate the separate annual depreciation charges to the profit and loss and state where in the profit and loss they're going to be shown. Okay? Bit of a brain tickler there. Bit of a memory test of what we've just been covering. Unless, of course, you've read the depreciation notes.
Stating where it is.
Okay?
They're both in the middle one. Overhaul. Overhaul is again. Direct, indirect, yeah. Overhaul. So 1,012.
12,000.
Right.
Oh, sorry. Okay, guys. Question 1. Annual depreciation charge is £5,000. Hands up, who agrees? Ah, you're getting canny now, aren't you? You know I'm going to throw you the old curveball, okay? So, hang on. What is the figure then?
1,000.
1,000.
Are you sure?
Yep.
Yeah.
How many of you got 1,000? Well done, well done. Okay, what about number 2, please?
12,000.
12,000.
Do we all agree with that? Where is it shown in the profit and loss?
The middle.
Middle.
Indirect.
Indirect.
Huh? 2 equal.
And where's indirect? Top, middle or bottom?
Top, middle.
It's
Top.
it's the bottom.
Bottom.
It's the bottom. It's the bottom.
Yeah.
So, £1,000, okay. And it's shown under office overheads as depreciation.
Overhead, yeah.
And if you were showing the asset in the balance sheet, it would be £5,000 less £1,000 depreciation, giving you a net book value of £4,000. That's what the asset is worth at the end of that time. What about the second one? You're quite right, it's 12. So in the back, it's shown under office overheads, £12,000, but look at the balance sheet. The balance sheet, you start with the cost, so that is always 39,000 less the depreciation for that year, giving you a net book value of £27,000. Now, a little bit harder is the reducing balance depreciation. And for this, you do need a calculator, some of you, okay? It's the depreciation rate. It might be 10, 20, 30, 40%. You're given the rate, multiplied by the net book value. It's always
And
the
then
net book
reduce it
value of the
by-
asset. So, and the net book value, exactly as I've shown you here, is the cost less the depreciation. So an example is office equipment purchased on the 1st of January 2010, £40,000. I want you to count and watch this very carefully. Look what it says in the question, which is why I want you to be very careful. Calculate the depreciation charge using the reducing balance method. You will be told which one to use, at a rate of 40% over 3 years. 31st of December 2010, 2011 and 2012. Off you go. Off you go. Depreciation rate multiplied by the net book value. The net book value is the cost less depreciation or less accumulated depreciation, because you have to add the depreciation from the first year to the second to the third, etc. Actually, you can calculate it by hand. Guys, you can calculate it by hand. That's why I gave 40%. It's not a difficult one if you haven't got a calculator. Or if you haven't got a phone, that's not a calculator. But please, in the exam, make sure you read the question. %, cost is 40,000 multiplied by 40%, gives you depreciation. Take that depreciation from the 40%, it gives you a net book figure. You multiply that net book figure by 40%, give you the next one, deduct that, and so on. We're going to have a break after this, and then we're going to cover investment. And there's quite a sizable question in the exam on investment, so we've got two methods. Payback period, quite straightforward, and the accounting rate of return, both of them very straightforward. Don't speak to the students from last year, because I've changed the question for this year, which means you've got to work it out. It's not just a question of looking at it and saying, oh, this is the best because it's got the best return. I don't need to use the method. Yes, this year you do. Okay, I've corrected that for pro pass. Okay, guys, let's have a look. How many of you at the end of 2010 got 16,000? Hands up. Okay. It's 40,000 cost multiplied by 40%. 4 4s are 16. Take the 16, deduct that from the £40,000 cost, gives you a residual net book value of £24,000. And if you have a look at the study notes, depreciation, I suggest that you practice this layout. I've given you in the study notes questions, and I've also given you the answers this time. They're all included. How many of you got the figure for 2011 of 9,600? Okay, a bit trickier. This is a bit trickier. Okay. And what about the final one, 5760? Well done. Well done. Did you get the net book value of 8640? Yeah. Yeah. And guys, again, with anything like this, it's understanding the rules and regulations. It's same as computing. You need to understand the rules and regulations, and then you just need to practice it. It's formulaic. Any questions on that? Any questions? Excuse me. So, now calculate if the net book value is 8640, calculate the depreciation charge on that for 6 months to 30th of June 2013.
6 months.
The other reason I set questions like this is because the feedback that we get from employers and the workplace is that graduates very often emerge with poor arithmetic skills. So if you're wondering what this has got to do with computing, this is really about giving you some practice on basic arithmetic skills. And depreciation is an important factor in the workplace. You're going to be involved in computing projects, large and small, because you're going to be buying assets, etc. You're going to be using assets. Let's have a look. It's 1728. How many of you? Well done. Well done. No. Don't make that mistake in the exam. Don't do it for a full year if you're asked for 6 months. Where is it shown in the profit and loss account? Top, middle, or bottom? Oh, somebody got a bit shy. Bottom, yes. Indirect overheads. Well done. Okay. Take a break. Come back at. What do you want? I think you need to come back at 15:15 because we've got investment to go through. So come back at 15:15.